Chris, gold and the rally is something that everyone's been tracking, and it's clearly uh, driven by concerns about the US economy. What's your own reading about gold, particularly in light of how the economy has been performing despite concerns about the kind of retail impact higher tariffs would have had on US consumption?
Yeah, no, I view gold, this gold bull market. Well, we've been in a long-term gold market for some time, but the gold bond market really got momentum in early 22. And what's driven this gold bull market so far is buying by non-G7 central banks, including India's central bank, of bullion as a reaction. And this buying started almost coincidentally, not coincidentally, to the day as the Ukraine war broke out, because it's become clear that the world at large outside G7 was shocked by the decision to freeze Russia's foreign exchange reserves. And since then, central banks outside G7 have been buying bullion on a net basis every quarter, as a result of which gold is now a bigger share of official foreign exchange reserves than the euro. So that's the key driver of gold's performance. More recently, we're seeing more retail participation in the Western world, and the fact that the Fed is going to cut rates today by most likely 25 basis points, and the Fed is cutting rates when the inflation remains not unsignificantly higher. I mean, it's basically clearly still higher than the 2% target on a year-on-year basis. So the Fed is in the process of basically is going to fudge its inflation target, and this move will be rationalized by the weakness in the labor market. But while the labor market is weakening, it's more a question of jobs being hard to find than because we're seeing massive layoffs. So I think gold remains a hedge on my base case, which is the dollar is in a long-term downtrend. So my global equity portfolio, I have a 10% position in gold mining stocks, which have been rallying dramatically of late because they've been underperforming gold. Normally they would outperform gold in a bull market, and I have a 6% weighting in Bitcoin ETF. So I have 16% of my global equity hedging this dollar weakness.
Well,
unfortunately for Indian investors, there aren't any gold mining stocks in the Indian stock market because right now they're in a very good position. Gold's at all-time highs, and energy prices are low, which is their major cost. So they're making a lot of money, and they don't hedge the gold price anymore.
Absolutely, and there will be a lot of our viewers who would take note of these remarks, not just on gold, but Bitcoin, which also, from a direct opportunity within India, is barred by regulation. But what about silver, Chris? What's your view on silver?
Well, silver is high beta gold. So if you're an aggressive high beta investor, silver is an interesting speculation. But if I have 80% allocated to gold, or if I have let's say if I have an allocation to precious metals, maybe I put 10-15% of that in silver. Okay. But if I'm a very aggressive investor, I may choose to put 100%.
If you like the video, do like, comment, share and subscribe.